Hey everyone, welcome back to my channel. Today I want to talk about a question that one of my new subscribers has asked about, which is why did Apple stock go down 20% this year? So this new investor, and I'm super excited about this question because it's so important. So there's many factors why not only Apple has gone down, but most stocks have gone down in value. So we are currently in a recession, and a recession is 2 quarters of basically non-growth. So when you have a quarter of non-growth twice consecutively, that is considered a recession. How did we get to this point? Well, it first started with the electric car initiative. We've all been advocates for clean energy and things like that. And we want companies like Tesla to continue to thrive, innovate, and create more economic, more eco-friendly environment and future for us. However, with some of the initiatives that were passed, they're basically trying to put gas companies out of business by 2030, and in such a short time span, gas companies are now looking at raising the price on their oil in order to accommodate for maybe going out of business in the short term. Another thing that is to be considered is the U.S. imports about 2 million barrels of oil a day. And when you are in political fights with places like Russia that supply us with oil, that can increase gas prices. Why am I talking about gas prices? Because that correlates with inflation. When the price of your dollar does not add to the new prices of goods and services, then your dollar is worth less. So when gas goes from $2.30 to $3.70, and in some places like New York and others, it was at $5 at one point, your dollar is literally worth half as much in certain areas. So when companies and businesses operate on debt in order to service their businesses and cheap debt, the Fed raised their interest rates and inflation rates. Their interest rates by 1 point several times. Basically, 0.75 basis points almost every single month. Every time they had a Fed meeting, they raised it to the point where the basis points are at 5 or close to 5% now. And just to inform you, interest rates were as low as 2.5% in early 2021. And now interest rates are close to 7%. What does that mean? That means we're paying 3 times more for things like houses, for things like cars, right? With the shortage of cars during the COVID period, car prices went up, used car prices went up. For the first time in American history, the price of a used cars across the board cost more than some new cars, just because you were able to get your hands on it, and new cars back orders were so far back you couldn't get a hand on a newer vehicle. So you're paying more, you're getting more money to sell your used car than what you actually paid for it. Unheard of, and will probably never happen again. So again, the price of items costs more than the American dollar. Now, why did this affect Apple? Apple is not a company that uses a lot of debt. Actually, they have $1 trillion in reserve. They are probably one of the best companies at keeping cash reserves. However, they're still going down in value because it's a part of the S&P 500, which is the stock market index, which totals the best top 500 companies in America. On top of that, people who are losing money because of this inflated economy, and they need to have cash on hand in order to just live their life because now their dollar is worth less, so they need to pay their bills. They're going to take some of that money from their stock market investments, even if they're doing well, because they need to survive more than they need to make a little bit extra cash. And so you'll see companies like Apple take a hit, even if they did nothing wrong. Now, what people are going to look at even more strictly now is going to be how much profit is this company yielding prior to last year? And also, how are you as a company going to make more money in a time where people are trying to save as much as possible because everything is more expensive? How are you going to make more money than you made last year in this type of economy when literally everything costs more, and so people need to be pulling out of the market to sustain their life? How are you going to keep people from selling your stocks and actually buying into it? It's very, very difficult to do, but this is what these businesses are tasked with right now. They are tasked with showing profitability in order to maintain their stockholders. So what you'll see from these big companies like Facebook, Twitter, Google, all these companies are laying off people, Redfin, Zillow, right? Because one, the real estate market is affected, the stock market is affected, the price on debt has gone up, so they can't just pay for cheap labor anymore because labor is no longer cheap. It's more expensive because the cost of hiring people have gone up. Everybody was quitting their jobs in the past, demanding more money. Guess what? Now the jobs can't pay those wages, so they have to cut back on employees in order to pay some people those same wages, right? So all those people who wanted higher incomes, especially those working from home, they're the first to go. Why are they the first to go? If you're out of sight, you're out of mind. So the people who are in their boss's face regularly are the people who are probably going to keep their jobs more than those who are not. And statistics show that if you've been with your company less than 3 years, you're probably going to be the first to go. Or if you work from home, you're probably going to be the first to go. So those are the two groups of people who are typically going to be the first to lose their job if they lose their job. Now, in pertaining to Apple, Apple is going to probably cut some staff here and there. They're going to try to show as much profit as possible. As you can see, the prices on their products are not going up compared to other companies raising their prices significantly, because Apple is trying to give an affordable product in an inflated economy. And so that is probably going to bode well for them and help them in retaining some of their client and customer base. They'll make a lot of money using certain services like App Store and things like that. But a lot of that profit is going to drop off, like the App Store and things like that, because people only buy games and little other products like that in good times when they actually have the money to be a consumer. You're not going to go in debt to play monkey balloons or whatever you like in the App Store, right? So Apple is a strong company. Yes, they're down right now, but don't expect them to be down for long. It's a company that many people enjoy. Many people have iPhones, and they will continue to invest in Apple for the long term. They will see profits in better times. And as long as you continue to be consistent, you will definitely see better returns over the course of a decade. So now, that is my opinion based on what I know right now. Of course, companies are subject to change their policies and their business structures. So always do your own research. I am an investor in Apple stock, and I am a continued investor in Apple, and I will continue to be an investor in Apple until further notice. And if I do stop investing in Apple, it'll be for a whole nother reason that may come about later down the line. But as of right now, Apple is a strong company in my portfolio. Is actually one of my top, I would say, 10 stocks in my portfolio. I own 31 stocks currently, and I have massive positions in each one of those companies. So Apple being at least 5% of my portfolio is definitely a big contributor in my stock market portfolio. So with that said, I hope that I've answered your question. I hope that you've learned a little bit more about the economy itself. What we're battling all across the board is not just Apple as a company, so don't take it out on them. I would suggest buying and holding, but again, I'm just an average person on YouTube, so do your own due diligence and understand if you like this company, if you believe in this company, if you think that this company is going to remain profitable, you want to hold it during the bad times, because in the good times, you will reap the rewards. You're buying and purchasing Apple right now at a 20% discount. Can you imagine that? In a few years, it's going to be worth so much more. And you will reap the benefits of buying it now rather than buying it when it's already at the top. You want to buy when prices are low. You don't want to buy when prices are high, because at that time, you've already missed all the good returns. All right. Again, my name is Festus. I post daily, every single day at 8 a.m. If you enjoyed this content, please make sure to like, comment, and subscribe, and I'll see you on the next one. Peace.